Is real estate going to crash or is it going to go through the roof? In today's video, we are going to talk about what's going on with real estate right now. I asked my audience, what do you want to see? And this was one of the most requested videos. So here we are. My name is David Quintieri, and I have been looking at the economic data that is so complex for well over a decade, and then I've been making these videos so that we can all understand the truth about money. And then we're going to link this information to what it means to you. I think that's really important because that's going to allow us to make really good decisions, and we can start right here and now. Now, we got to talk about residential real estate first, all right? Everybody was so excited that springtime was here and that prices would go through the roof. The sellers were looking forward to it, real estate agents, mortgage brokers, and so on. However, it's been a bit of a bumpy ride. It's been slower than expected. Pending and existing home sales slumped in March, largely due to that pesky increase in mortgage rates and the ongoing economic uncertainties. That's part of it. I want to know what you think here as we talk about inventory in the next part, but I think it's really important to understand that there's so many different moving parts and there's also different locations. So you might be in the middle of nowhere having one experience, and then you're in San Francisco having another experience, and maybe you're in Miami having another one. So these are, of course, averages, but let's see what we can take from it. Here's something interesting. Home prices dipped slightly in 2023. Yes, I know, you heard me correctly, but the median existing home sales price declined 0.9% in March 2023 compared to a year ago. Now, before you go rushing out the door to go buy that home at a discounted price, we're not there yet. The problem is that housing supply issues are still here. They're like that uninvited guest at a party that just won't leave. They're lingering, and you're looking at your watch thinking, oh yeah, are these people ever gonna leave? Tight inventory keeps prices high and poses affordability challenges, especially for first-time home buyers. But the plot thickens, and I'll tell you why, but you gotta understand what's going on with the Federal Reserve. Because when you have this issue of increasing interest rates, that poses a challenge to those who need to borrow money. I know it's obviously simple when you think about it like this, but it has knock-on effects. Because if that individual isn't going to buy that house, well then that means they're not going to use a real estate agent, they're not going to use their mortgage broker. The bank, when they lend out money, they make a lot of money on that over time. There's just one thing after another. The builder doesn't get money, the renovations, whatever the case may be. So all of these things add up. In recent weeks, mortgage rates have been on the rise, and depending, your mortgage rate and so on, depending where you're getting it from, your credit, all these things, I've seen them higher than 7% in the United States. That is a big difference from where it was, let's say, 2020 timeframe. It was a really big different story that we see now. If you thought that was all, there's another twist. New mortgage fee rules were imposed by the Federal Housing Finance Agency in May in 2023. These rules may impact the market, especially for those who are planning to put down between 5% and 25% on a conventional mortgage. That's what I think people should be aware of. If you want to know more about that, I can definitely do a video specifically about it. You let me know in the comments below. There is a silver lining. Some experts believe that the rate of inflation will gently decline over the course of this year. That could mean lower mortgage rates for the remainder of the year. So we got to find out about this, and only time will tell. But it depends on the bank crisis and all that. That's kind of the worry there has sparked this increase in mortgage rates yet again, okay? Because it's not as if the Federal Reserve sets mortgage rates, they set the Fed funds rate, and then everything is kind of balanced around that. If you want to know about this stuff, hit that subscribe so that you can be notified of it in future videos. I'm going to break all this down. real estate is such a key component because you got to live somewhere. As well as if you're an investor, you want to know all this information. It might not be sexy, it might not be so fantastic where you see those 60-second shorts saying how I made $4 billion in 30 minutes doing this one thing, and people think they're learning a lot. But unfortunately, a lot of that learning is just grinding. But that's where we are at. We got to talk about commercial real estate. I know even if you're not going to invest in commercial real estate, there's a real signal here that I want you to pay attention to. The word of the day with this is challenge. High interest rates and a potential recession will make 2023 a challenging year for commercial real estate. The recession is not something that we can know in advance. Some say we're already there based on so many metrics. We are already in the middle of one. And that is, in my opinion, a very important part of it. When I look at commercial real estate, I see it overall from the data I have looked at, from the different analysts and so on. They've said something very clear, that we have tightening financial conditions, and that has led to a problem within the commercial real estate. What is commercial real estate? Well, of course, you've got office, you've got retail, but also technically commercial real estate could be multifamily. So that's like apartment buildings. So although, it's still residential in a sense, it's considered to be commercial real estate. All of that together should be making you think about what's going on. We've got problems with the retail. There's way too much of it. At the same time, there's a lot of debt on it. And the second thing, we got office, where there is definitely less need. Now, a lot of these companies, they're bringing their workers back to the office, but it's not full time. It's like 3 days a week, let's say. So overall, a lot of these companies have been getting rid of their real estate, at least some of it. And so that poses a big problem for the debt that is owed on those real estate properties. If they start to be unable to handle their debt, you have a cascading effect. Suddenly, just like in 2008, but commercial, let's say commercial side instead of the residential side, you start to see that knock-on effect. The insurance companies, the mortgages, these companies have trouble paying back all that debt or let me just hold on to it. Or what they do is they say, the company can say, and there's a lot of people like this, big businesses that will say, we're going to file bankruptcy and we are going to pay you back maybe 25% of what we actually owe you. Or they don't even have to file bankruptcy. They say, we can't pay you. We owe you money. Whatever that bank is, the lender of any sort. We cannot pay you the 100%. We can pay you 25%. We could pay you 50%. So now they take that right down, just like that. And that hurts these companies. Yeah, the lender, maybe you don't shed a tear for them, that's fine. But the whole point is you start to slow down this part of the economy, which has an effect on other parts of the economy. Do you see what I'm saying here? What is the solution to this? Like, what are they going to do, those in control, the government, the central banks? The very clear, distinct thing that they will try to do is stimulate. And that means handing out checks to people. They could make, first-time home buyer little plans that they create, or they start printing a whole bunch of money. And that is the worry. That is the big, big worry. So for today's video, that's it. I hope you enjoyed it. If you did, hit that like button down below. Don't forget to subscribe, and I'll see you on the next one. Take care.